In this video, I'm going to be going over all of the stocks that Pershing Square Capital have been buying and selling in the past quarter. If you don't know already, Pershing Square is run by Bill Ackman, who is one of the most well-known investors of our generation. And just for some social proof, he currently has over $18 billion in assets under management. So now jumping into his recent trading activity, he's opened a fairly big position in Brookfield Corp and Nike. He's brought into Seaport Entertainment Group, but that is only a small percentage of his portfolio. And then he has made a few minor adjustments in selling smaller positions. Bill Ackman has owned Nike in the past, and he made some decent money on it, and then he sold out of his position. In the past few years, Nike has seen a huge sell-off, so it's now trading at a 22 PE ratio, which is fairly attractive on paper, but then you look at the competitive market they're in and how a lot of their products are overpriced. Along with very slow growth on the top line, I don't think this is the best investment, but I also think a lot of risk has been taken out of this stock already. So I'd give this stock a 6 out of 10. And if you're wondering how Bill Ackman does perform in the market, he has a sort of hit and miss kind of track record. Some years he'll outperform the S&P 500 by quite a large margin, and other years he will underperform it. The next company is Brookfield Corp. Now I do think this is a very solid investment, but I think it is very overvalued at the current time. If you don't know already, Brookfield basically invests into private real estate, renewable power infrastructure, credit cards, and private equity. They are a very solid company on paper, but I think their PE ratio is a bit overblown, and that's why I would personally stay away from this position. But at the same time, maybe it could see some explosive growth in the future, which could justify that valuation. In terms of the quality of the company, I'd give this one a solid 7.5 or even an 8 out of 10. But in terms of it as an overall investment, I'd probably give this one again a 6 out of 10. To one of the companies he decided to trim by a substantial amount, it is Hilton Hotels. Personally, this is a stock I've looked to invest in myself, but the only thing that's kept me away from it is that 51 PE ratio. Again, they're a great company, a very solid 8 out of 10 company, but I think the fundamentals are overvalued at the moment, so I think it is good that he did trim his position. If you found this video helpful and want to see more videos like this, make sure to follow my page and save this video.